Let's talk a bit about the euro versus the dollar, but also the GBP USD, dollar yen, Aussie dollar, and the New Zealand dollar. The dollar is gaining against the euro and it is gaining against the Japanese yen, but weakening against the other major currency pairs. Let's talk a bit about what may happen next with these pairs. All right, so this is the euro versus the USD, and we're looking at a market that is coming down a bit. And this is fully normal from a purely technical perspective, because we did have a decent 300 pip rally or so from the very low all the way to the upside here on the heels of the US election. However, we never really managed to break any major levels here. And there's also a lot of fundamentals that are sort of keeping this in track, because I personally think there wasn't really a clear-cut case to either buy or sell the euro USD on the back of Biden winning or President Trump winning. On the other hand, as we talked about before I left the holiday, because I was away last week, I said that, you know, emerging market currencies are interesting, and that's really where I focus. And I bought some South African rand and some Norwegian kroner, because with no Trump in power, there's probably going to be less trade wars, and it's probably going to be more dialogue instead of direct confrontations, as we saw during President Trump's being president. And here in the Euro USD, we are trapped, and the ECB is probably going to do some QE or some other program on December, because that's what they've been telling us. That as well as bearish. On the other hand, the Federal Reserve is probably not going to do anything right now to weaken the currency. And on the other hand, maybe with Biden, we might have some stimulus package at one point that could encourage, the weakening of the dollar. Biden himself is looking to introduce about 1 trillion in spending on infrastructure. Some people say even more. It really depends if he gains control of the Senate or not, and that's going to be determined on January 5th, I think, is when they're going to have elections in Georgia. For now, though, it looks like the Republicans are going to win those Senate seats. So it's going to be a situation where you're going to have a president that really can't do too much. And that actually is quite good, especially for stock markets, at least traditionally. So what's going to happen here with the currency? Again, there's no clear-cut case, but from a technical perspective, there is a clear-cut case. We did go upwards. We didn't take out that high. So now we're coming back towards the lower end of the range. And I'm happy to be bullish between 117.17 and 115.97. On the other hand, if we take out this level, because this is more like a rectangle pattern now, or a double bottom, we could potentially trade as low as 112.93. That's a 304 pip slide. Now this as well is a neutral pattern, and it does suggest that if we take out the high here, that we could potentially trade all the way up to something like 122.12. All right, here's the British pound. It's doing quite good today. I'm not really sure why. Maybe someone knows something about Brexit negotiations, possibly. People are super excited, and as you know, I've been suggesting and telling people to be bullish here, and I hope you were able to capitalize on some of those moves. Now I continue to be bullish, but we're still sort of stuck in this bit of a sluggish trend, and sometimes the sort of rhythm of the market changes. Like here, for example, you can see in June, July, we're sort of trading sideways, and then in a bit of definitely a bit of a channel, but then here you can see we started to accelerate. Now, because the EURUSD is coming down, it's difficult to say what's going to happen next here. But I can tell you if we assume that this sort of sluggish uptrend continues, then this is not the time where we want to be a buyer. We want to be a buyer on a dip. And yeah, right now it feels really alien. Is it going to come down to 130.36? I mean, that's far away from where we're trading right now. Yeah, I think so. We can come down, and when we do come down, I think people are probably going to be buying. Right now, of course, you have a bit of bullish momentum, people targeting 133, maybe 134, but it's not worth it. At least not what I think, because of the risk-reward ratios. And now here's the dollar versus the Japanese yen. Now this is a difficult one. We were on our way up, and then on our way down, and then all the way up again. And here, from a sort of big picture perspective, we did trade below some significant levels. Like this is a weekly chart you're looking at right now, and we did take out the August 26th low. This is 2019, and this is the March 2018 low. And this is a difficult one because we had that break already here on the back of COVID, but the market didn't really manage to maintain those gains. But effectively, we triggered that. We had a decent close last week, and from a longer term perspective, you know, as long as you trade below 106.19, we may come back down lower again. But I wouldn't really allocate any money here. Like, this is a very random market many times. Like, we drop sharply, come up sharply, trade sideways, very quiet for a long time, and then comes down. So it's a bit of a difficult one, and then something I would definitely skip for now. Aussie dollar versus the USD. This is much nicer and sort of far more, makes a lot more sense to trade. Here as well, we're looking at a bullish uptrend. And one could, if you don't want to be too close to all the action, just focus on 69.56.86. But I'm focusing on that level because I'm focusing on this low here, which is the 70.44 level. And from a risk-reward ratio perspective, we're closer to the highs. So people sold here in September and they're selling here again. And sometimes we just trade much higher. You know, it would make perfect sense. The Aussie dollar gaining on the back of less trade wars, that makes a lot of sense, right? And we might just push higher here. But I wouldn't be a buyer here at these levels. Again, I'm looking for a pullback to 71.70 from that level and this level here. I think that's what's interesting. Here's the New Zealand dollar versus the USD, which is doing really good as well. We had several bullish cases here before I left for holiday here in October. And overall, we've been right about the trend. But we had to have patience. You know, we were trading at these levels. We said, don't buy here, look for a correction. We had a correction. Took a sweet time, eventually traded upwards, and we went substantially higher here. We traded above these levels, and there's something called a failed head and shoulders pattern. So this is a head and shoulders pattern with a head, double head, left, and a right shoulder. And when you take out this level here, the right shoulder, then you can sometimes use this where you have that sort of move, break here and here. But this is also quite interesting actually. If you look at the weekly chart, you just hide everything. You see you have head, left, right, shoulder, and then you have like a trend line going here or trend line going there, and that actually tells us that we can go much higher. If we don't grab the lowest point, if we just grab something like this, then you're looking at potentially move to 80 cents, $80 cents per New Zealand dollar. So things are looking good here, which makes a lot of sense as well, because you see the central bank of New Zealand, they thought that the unemployment rate was going to be around 7% or something like that, but it's closer to 5%. And I think the end of year outlook was even more pessimistic. So the economy has held up much stronger than anticipated. And they're going to have a rate meeting this week, and that is probably going to change in a way that they're going to be more upbeat. Now, if you look at what big banks like Westpac thinks, and Westpac is a big bank in that region, they think that they're still going to cut interest rates, and they also think they're going to announce that they're going to introduce lending, like cheap loans for the banks, because they don't want to just lower interest rates because it's fueling house prices over there in a way that probably is not going to be liked. But they will continue to support the economy, but in the short term, they got this very wrong. They thought things are going to be much more worse off, and that means that they need to make adjustments. So they're going to turn more hawkish, less dovish really, and that is supporting the price here. The thing is this though, should we be buying here? Should we be buying here? Yeah, of course we can buy here. We can go a bit higher, especially have these targets. But from a risk-reward ratio perspective, it does not make sense. If we buy right now, we go upwards, okay, we'll make possibly 123 pip, but we can easily trade all the way down for a loss of 128, and we could potentially extend even further. So a stop loss would need to be placed down here. That's a 275 pip risk, and I don't like that. That's why I'm looking for at least a correction to the first fib, and then we're risking 96 pip. And if we just go up to the high, you know, we make 139 pip. On the other hand, if we reach that target, we can make 252 pip, and that's a risk-reward ratio 2.62. What would I be on the lookout? I would be on the lookout for, you know, GBP USD coming down to its buy area, this coming down to its buy area, and the Australian dollar coming down to its buy area. When we are at those levels, it makes a lot of sense to turn bullish again, and be betting again on a weaker dollar. One can, of course, also bet on a weaker dollar and get on emerging market currencies. However, though, I think to properly get a good entry there, you probably needed to position yourselves last week, just as things started to clear up and it was looking more likely that Biden would be the winner. As for that, there's a lot of twists and turns. We'll see what happens, with that. But the way it looks like, it does look like Biden will become the next US president. Okay, this concludes today's market update. We will be uploading more videos on our YouTube channel when we're back now. So don't forget to subscribe to these videos if you like this, and don't forget to watch the other ones. And more importantly, don't forget to like. It's really important that you like the videos. It sends a signal to YouTube that people are enjoying this content. And when that happens, more people can discover it. And why is that important? It is important because if we see that people are watching the presentations, watching the shows, then obviously we want to do more of them. And if people are not liking them and we're not really getting too many views, then that's also a very good sign that we should not be doing them. As you know, I'm a trend follower and we want to go where the money is. All right, guys, thanks so much for watching, and I'll see you guys very soon. Bye-bye.